Hello everyone. Today I am going to provide you with an overview of MCX Natural Gas from PhillipCapital, India. We publish a weekly outlook reports technical for commodity segment, and last week on 31st of July, when natural gas ended at 640, we have given a view over natural gas for the coming week, that was last week from 1st of August to 5th of August. We had the bias that the counter will be ranged to down. So any pullback towards 700 odd levels can be looked for counter trading shorts once again. Last week we have seen that natural gas has ended just around its crucial support levels of 640. As we can see here on the charts, it was a kind of trending support levels. But we had maintained the same outlook that the bias continues to be ranged to down. And in weeks to come, the counter can attempt towards the lower support levels of 540 on the lower end. As per the write-up which we have mentioned, you can see on third paragraph, we have mentioned that technically one can hold range to down outlook within a broad trading band of 550 and 400 can be expected on the lower end in coming weeks, since the counter has entered into an oversold zone on a daily charts as per the short-term time frame. So there can be volatility and pullback which can be sold off towards the resistance levels. So we were expecting volatility, but at the same time we had the view that it can be sold on pullbacks. Now, if we see how it panned out last week, it made a low of around 598, and it witnessed a pullback towards 670, closing the week at around 642, almost forming a kind of doji. Flat closing was there. So we have found some opportunities during the week. So as on 3rd of August, we have seen that natural gas has slipped down towards the lows of 622, and we were expecting some kind of bounce back from lows because it has entered into an oversold zone on the daily charts. So we have recommended a kind of option bullish strategy with the outlook of range to pullback. And in this strategy, the break even was at around 650 odd levels. We have sold 700 put, that was in the money, and we have bought at the money 620 put in the ratio of 1:1. So as per the payoff diagram, we can see here that the break even was around 650 odd levels. That means closing of this counter over and above 650 would have given us the profit, and the maximum profit was around 66,000 per lot, which was over and above 700 mark. On the flip side, the maximum loss in this strategy was 33,750 per lot if the counter would have slipped down below 620 levels. Last week ended almost doji, so we have seen some kind of pullback in the counter, and this strategy was mildly in profit of 7,500 rupees per lot. Apart from natural gas, we have also initiated some strategies, profitable strategies like gold, where the bias was ranged to positive. So as on the same 3rd of August, we have initiated a kind of bull spread clubbing futures and options, a kind of hedged bullish strategy at around 51,450 odd levels, and we have taken the partial profit at around 52,045, kept the partial hold positions expecting the high levels of 52,500 mark, and we have seen that gold has tested almost those resistance before slipping down back to 52,000 mark. So meanwhile, we have already taken a profit in gold strategy, that was around 32,000 per lot. In crude oil, we have initiated a bearish strategy range to downside over the bias. So what we have done is, as on 3rd of August, when the crude oil was trading at 7447 levels, we have bought 7600 put, we have sold 7200 put, and also sold 6800 put in the ratio 1:1:1. And here the break even was 7530. That means closing below 7530, we would have seen this strategy in profit, and the maximum profit was 33,000 per lot, and loss was 6,900 rupees per lot if the closing was over and above 7,600 levels. So crude oil, in line with expectations, slipped down to the lows of 6,944 levels last week before ending the week at 7,088, and this strategy was in profit of 8,900 rupees per lot. Now going forward for the coming week, natural gas, which ended last week at 642, again we can see here that it formed a kind of doji, but the bias continues to be ranged to down, trading below 680-700 mark. On the lower end, we believe that 600 will be important support for the bulls. If that level is being breached, then we will be expecting further pressure in natural gas, which can take down towards the lows of 540 in days to come. So for the coming week, we hold the bias range to down, pull back towards 680, 700 odd levels can be again look for reinitiating short bias, especially in the strategies, because this counter is a high beta counter and we can see high volatility in this counter. So we need to place these kind of swings on a conservative note using option strategies. So for the coming week, any move towards 680 to 700 mark can be looked for trading short bets. On the flip side, initially 600 will be looked as a crucial support. If that level is being taken off with conviction, or for next on a closing basis, we can expect next target of 540 on the lower end. Thank you very much. For further such kind of inputs and details, you can contact us on the given mail ID and the contact detail. It will be a pleasure to share the reports and the strategies in respect with the natural gas going forward. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.